welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about May's big news in terms of finreg and fintech. Without a doubt, one of the biggest news items thus far this month has been the deplorable state of the markets, particularly also with the crypto crash, the hashtag that's been doing the rounds across social media at the moment for a very good reason, given we're seeing quite a dip in terms of performance for these markets at the moment. So it's been obviously a big area of discussion across the industry. Regulators have been keeping a very close eye on crypto. We've seen a lot of activity from the SEC in terms of enforcement as well. BitMEX was one of the the crypto firms that got caught out by the SEC earlier last month. And they were fined, and obviously that hit the headlines as well. So there's been a fair amount of fraud and investigation and enforcement in that space as well. It's interesting to see a lot of industry commentators talking about crypto and whether this dip is going to be ongoing. When will we reach the bottom? And what does this mean for the long-term future of crypto within the investment space? So a lot of big questions being asked. I think there's been some divergence, obviously, from the regulatory perspective across different jurisdictions about how crypto-friendly regulators are. Seems the UK regulator is trying to come across as a little more innovation-friendly, as they would call it, when it comes to crypto, whereas in the US, there's very much a crackdown going on from the SEC's perspective. Maybe the CFTC seems a little less unfriendly, if you want to put it that way, towards the crypto community. But certainly there's a lot of debate about the right approach. I know that we've had, and I previously mentioned that in the US, there's been discussions about whether there should be another regulator added to focus directly on crypto. This hasn't proven too popular, but largely because of the cost and the complexity of setting up another regulator within an already complex financial regulatory sector and sphere within the US market. So whether we need another regulator or not, I think for sure we're going to see a lot more debate and discussion about crypto over the coming months. Another interesting exploration by the FCA from the FinReg front is that it's just put out a call for input on the topic of synthetic data. Now, I was at an event last month where we were talking about the challenges of dealing with data, and especially if you're a smaller firm, having to try and find data that's easy to use, that isn't under facing restrictions due to data privacy when you're training artificial intelligence models or machine learning models. So certainly there has been a lot of discussion about synthetic data within the IT community. Now it's broadening out to the industry as a whole in terms of being able to have non-sensitive data that you can use for various purposes. Now, the regulator's also keen to use this kind of data for its own ends, because obviously it's got its own models to train, it's got its own regtech or subtech that it wishes to develop. So certainly will be interesting to see the comments that will come in around synthetic data, any concerns that firms may have with it, particularly with regard to cost and availability of this data. I know there's lots of firms that have popped up within the realm to service this market and this requirement. So certainly an interesting space to monitor going forward. Now, another topic that I frequently talk about is environmental, social and governance investing and the FinReg that's being developed around that. To that end, this month, we've already seen ESMA put out some comments around the MiFID review that's ongoing. MiFID is obviously being altered to take into account ESG with regards to marketing and requirements around various products. Certainly, there was some interesting commentary from ESMA itself with regard to which a bit of education here, because I did not know this term either. I've heard of greenwashing, where funds are being marketed as ESG, but are not actually ESG. They're just being sort of brushed with a green sheen to make them look like ESG. The new term that I've been hearing ESMA using much more frequently now is green bleaching, which is the opposite. So it's looking at asset managers being dissuaded from marketing their funds as ESG, even though they may have those characteristics, largely because of fears of being accused of greenwashing, or potentially having to jump through regulatory hoops, or facing to much more oversight than they normally would for those products. So it's an interesting term, something to bear in mind, and I'm sure it will be a big discussion point with regards to the MiFID review and the taxonomy and everything else that we're working on in the EU, as well as in the US and other markets such as Singapore. So certainly ESG FinReg continues to develop, but one term there, green bleaching, certainly something to take into account. Now, across the pond, the SEC has faced a lot of pushback and industry commentary from various associations, various firms, various individuals on the topic of comment periods. Now, there's been a lot of pushback because the industry feels that the SEC, it's got a huge program of work this year. As I mentioned many times, it's got about 90 items that it's working through. And as such, it's outputting quite a lot of different proposals. Now, the industry usually only gets 30 days to review these and get back to the regulator, but they're building up. So obviously, there are a certain number of compliance individuals or operations individuals that have to review these comments, review the proposals and comment. And now that's not enough time, the industry says, for sensible feedback to the regulator. So the SEC seemingly has taken this on board. Most recently, I think a week or so ago, it said that it was reopening the climate disclosure consultation period, just to allow industry participants to further comment on that topic. And we've also seen the same with the Reg ATS and also private funds reg proposals being extended their consultation period. So certainly the regulator seems to be understanding that there's a lot of different FinReg items for people to review across the industry, and the more comments the better, and the better the regulation when it comes out the other end. So certainly is important going forward. I know that ESMA has similar sort of views. They would love to see more feedback and commentary. So maybe there hasn't been so much pushback here in Europe, but certainly definitely we've seen certain topics having lots of comments and certain topics having very few. So it would be good to see a bit more feedback from the industry, because I think let's face it, we don't get sensible regulation unless we get a lot of industry feedback at the outset. Another topic that I often talk about is settlement fails and market infrastructure and the plumbing, the less glamorous bits of the industry. But Target 2 Securities annual report for last year came out this month as well. In reviewing that, it seems that there's been a very high rate of settlement fails, as we've seen with some of the ESMA statistics. But from this is T2S confirming that there are a lot of challenges there with regards to settlement efficiency, and it looks to be at sort of around 93% in 2021. So certainly much lower than it normally is. It usually hovers around about 98% over previous years. Although there have been ups and downs. 2020 was a very low point, as I've previously mentioned in some of these sessions. There's also quite a lot of data and detail from T2S in terms of the reasons why settlements failed, the largest reason being lack of securities. And market practices need to change evidently when it comes to this. So certainly they also updated from the operational resilience front, another popular topic, that there were 3 significant incidents in 2021 versus the 21 incidents they had in 2020. So obviously they may be getting more resilient with time, but it's certainly an important factor that there were outages and things that had to be addressed. So I know it's a big topic across the industry with DORA especially, and the regulators looking at it. So operational resilience is going to continue to be a very big topic going forward. And we've also seen a lot of discussion among central banks this month about CBDCs. So the Bank for International Settlements put out a report earlier in the month, again, surveying central banks on the development of central bank digital currencies or explorations of such. And 90% of those surveyed banks said that they are engaging in looking at CBDC within either the wholesale, retail, or both spaces. So certainly there's a lot of work. This doesn't obviously mean that there's a lot of progress. This is a lot of pilots. This is a lot of investigations. So certainly it's interesting to see it, but we must bear in mind that progress is going to be relatively slow, given we're talking about central banks here as well. Now, my final thoughts for this month are all to do with one of my favorite topics, data. Now, I was participating earlier in the month in an event at the London Stock Exchange hosted by The Trade, which was talking all about MiFID and MiFIR reporting data, or MiFID 2, I should say. Certainly, there's been some interesting findings from the regulator over the years in terms of infractions and problems with data. I think we've seen fines for MiFID 1, we've not yet seen fines for MiFID 2, but certainly common problems related to data and data quality. And now a lot of the issues stem from some of the research I've been doing. A lot of the issues stem from misinterpretation of the regs themselves or unclear wording. For example, some fields saying price and them actually requiring you to put the spread in instead of the strike price. So certainly there's a lot of confusion amongst industry participants about the data items that may be being requested by the regulator, particularly if these firms don't have huge numbers of people working in ops or support or compliance for that matter. So when it comes to reg reporting, so certainly that's an issue. If you are one of the smaller firms having to deal with all of these FinReg changes, regulatory change management, as we all know, has become its own thing, largely because over the last decade or so, we've had so much regulation to deal with. We've had endless ESMA Q&As, we've had endless changes and tweaks in the US, we've had different changes by various regulators in Hong Kong, Singapore, many of the other markets out there. So certainly it's a global problem. And data tends to lie at the heart of a lot of issues. Now, there's no simple quick fix, magic bullet for dealing with data, but embedding good practices and data governance strategies within your organization is certainly a start. And I think that's where a lot of firms are recognizing that a lot of effort may have gone in from the part of their IT department or their ops teams, but it actually has to be the business that transforms these things. So certainly a lot of the interesting discussions we've had around data tend to relate to building a framework for data culture and responsibility within the organization. Now, there were also some interesting discussions about data services and sale of data. I know that's become a particularly contentious issue, and there's a lot of concern and worry about a lot of the initiatives out there, particularly within certain market infrastructures, maybe on the part of custodian banks. There was a lot of discussion on the floor about what exactly people are doing with the data that they contribute to their service providers and whether that's going to be resold to them at a premium. So certainly, I think data will continue to be a big topic throughout the year and beyond. But certainly data is something that needs to be recognized as the most important thing that you are producing. After all, it's required for nearly everything that financial services firms do. So that's something that I hope to see much more discussion about from the internal perspective as well as the external perspective throughout this year and beyond.